If you decide to become self-employed, there's a lot you need to plan for. Managing your taxes isn't always on the top of that list. But if you're self-employed, tax time comes more than just once a year, so managing taxes should be a priority. Because an employer is no longer deducting Medicare, Social Security, and income tax contributions from each check for you, you likely need to make estimated quarterly payments to the IRS in order to avoid penalties, interest, and sizable tax bills at the end of the year. While it's best to talk to a tax professional to determine your quarterly tax payments, there are steps you can take to budget for your tax bill. First, account for self-employment taxes, including Social Security and Medicare, when you set your prices or hourly rate. For wages earned in 2014, the self-employment tax rate is 15.3%. Income taxes are paid on top of that amount. Next, aim to set aside at least 1/3 or even almost 45% of all your earnings in a dedicated savings account. This will help ensure that you have enough to pay your tax bill each quarter. If money is left over at the end of the year, add it to an emergency fund to cover any unplanned expenses in the next year. Remember, cash is king. To more easily determine how much you owe and potentially reduce your tax liability, track all expenses related to your work. This can include travel and client meeting expenses, as well as health insurance costs and a portion of your phone and internet bills. If you work from home, you may also be able to take a home office deduction that will vary based upon the amount of space that's dedicated to your work. If you must submit estimated tax payments each quarter, make sure that you submit them on time to avoid penalties. A qualified tax professional can help you navigate the payment process and make sure your paperwork is in order. With the right preparation and advice, you won't be caught off guard when the year-end tax season rolls around.